This episode is brought to you by 180 Markets, where it is our goal to bring every individual, fund manager, family office, or any qualified investor access to Australian Stock Exchange capital raises. If you are ever interested in how to access ASX capital raises in a super simple way, 180 Markets is for you. The sign-up process is easy. You just upload your ID, proof of your investor status, and your current brokerage account information. The settlement of shares goes right into your existing account, and you can access our very next capital raise. If you're interested in free, easy access to thousands of ASX capital raises, including placements, IPOs, reverse takeovers, and more, check out 180markets.com.au. Hello, everybody. Welcome again. Another edition, 18 minutes with 180 Markets. Friends, they say that history repeats itself, and it always does, but they're also a little bit different each time. And today we have a company, Citigold, and their managing director, Mark Lynch, and he's going to talk all about his mining for gold in a historic Charter Towers area in northeast Queensland, and how this area is truly iconic, gold mining going all the way back to 1871. But what's really interesting in the case here, and Mark is going to talk about Citigold, is that we're in this historic area, but with very, very, very modern techniques. With that introduction, Mark, welcome to 18 Minutes with 180 Markets.
Thanks very much, Greg. Pleased to be here.
Right. Hey, Mark, everybody's got a story and a background. And in your case, I believe you've been in 36 different countries, so you certainly have a colorful background. Can you just give us, in your words, a few minutes of your history?
Okay, thank you. Yeah, well, my background is like originally went to school, thought about doing other things, went into business, had a sporting goods business. I'd spent a lot of time figure skating and won a bunch of national titles. So again, that's something a little bit different. And then after that, started to look overseas as far as manufacturing and importing. My father had been active in actually pegging the Charter Towers goldfield. He'd been sort of waiting for literally well over a decade to get an opportunity. And the thing that intrigued him about the goldfield was its amazing pedigree. 6.6 million ounces actually produced and sold on the government records, and the average grade was 38 grams to the tonne, which is just something, astounding, as in the grade. So the nature of what it is at Charter Towers, it's been very well established and proven from its mining. So my interest in being overseas, I've spent a huge amount of time over in Dubai, and I've been to a lot of countries around the world looking at geophysics techniques at a lot of countries in the world, looking at mining techniques, whether it's in North America, South America, Canada, China, Europe, looking at civil tunnelling projects and talking to manufacturers overseas. So I spent a lot of time wandering around the planet, just really understanding what can be a modern way of mining Charter Towers based on, we've been down there several times in the past doing trial mining to get to know and understand what it was really like to mine there. And then going forward, what is a modern contemporary way of mining rather than trying to do things the way it was done even 20 years ago, leave alone 50 years ago, as in some of the technology that's been used in some of the mines today. They're still doing it the way they were doing it 30 and 50 years ago, which just seems not the thing to do.
Absolutely. It seems kind of crazy. And maybe we'll get back to it in a second about the techniques. But for our audience that maybe is not quite as familiar with the Charter Tower area, can you just give them an overview? And as I said, in the introduction, certainly it's been an incredibly historic area.
Yep. So 1871, you're correct. There was nothing there, and some miners found a little bit of gold in some of the creeks there. And then they were trying to find where it came from, and ultimately it led them to start looking underground. So they then started mining little prospecting holes and eventually went on to produce their 6.6 million ounces. And it's what's intriguing. So what is Charter Towers? It's basically this big block of granite up there. So it's the top of a batholith, and the actual reefs never outcrop. There was a few little leakages here and there, but the main east-west reefs, where the vast majority of the gold came from, they didn't outcrop. So they only found them thinking, well, there must be gold somewhere here. And they started digging a little bit underground, found a little bit of a crack. Oh, I wonder what this, and gradually as they got deeper and looked further. So as I mentioned, the big main east-west reefs, there's sort of then what they call the north-south reefs. They tend to be slightly thinner, but certainly have the same very high grades. So their average grades are around ounce to the tonne. And in those days, mining with hand tools in hard granite, their cut-off grade, they called it 6 pennyweights, which is 9 grams to the tonne. So if it didn't grade 9 grams to the tonne, they wouldn't even bring it to the surface. So with modern mining, we can do a lot better there. So you've got this granite batholith, big, huge piece of granite that has had pressures applied to it, and it's cracked on a crustal scale, as in tens of kilometres long, and then it's plunged down, and then subsequently the mineralisation flowed up into those cracks and then cooled, and that's where it's been ever since. So the old timers, when they stopped mining, wasn't due to, shall we say, the gold running out. It was just the economics at the time had changed, a bit like it is in modern minerals today.
Absolutely. And, that's a great overview. And maybe, just bringing it into Citigold for a second, can you just talk about where do you stand as far as timing and, it's stated that, we can get to, 300,000 ounces of gold production in 5 years, which is certainly a tall task. And if we can get there, that'll be truly phenomenal. But can you just give the audience an overview of where you stand right now?
Yeah. So in 2012, we published a technical report in compliance with JORC standards to do with what is the mineral resource and reserves. So prior to that, we'd been excavating underground, a little bit in the central area, mainly at one of the reefs about 5 kilometres behind the main reefs at what we call the Warrior area, to get to know and understand what the mineralisation was like. Despite a lot of old records there, it's in this day and age, you need to get to understand what you're dealing with. And I think it's fair to say that a couple of times in the past, we'd not funded it properly. We didn't get a strong partner. This time around, we're taking a little bit more time. So we've got about 175 square kilometres of mineral tenements. All the main areas where we're doing our test mining in, we have granted mining leases up there, and we've already excavated in the main central area down to 200 metres vertical. So going forward, the hard part of getting to work with a town, so the mine historically, as is the case in mining, that when they start mining, they sort of build the township where they are, and then when mining virtually ended before 1920, it then went on to be an education centre, and then partly a retirement centre, and then a lot of schools and accommodation. And it's on the main road between Townsville and out to Mount Isa. So there's always been a lot of traffic and people travelling through. So it's a great town of 8,500 people. They've got granite, which at 250 MPa is like the same strength as the concrete that they put high, tall skyscrapers up with. And we've got all our licenses to operate within the town, so we don't have to build infrastructure, we don't have to build power, we don't have to build water supplies, we don't have to build housing. It's all there, and we've established a way that we can work within the township in harmony. And when I was up in Charters Towers just about a month ago, I met with the new mayor. He just said, when you guys starting, whatever we can do, let us know, because we know who you guys are, and we'd like to see you mining as soon as possible.
Absolutely. And I suppose, in that vein of getting mining as soon as possible, what is the next event, if you will, to help expedite that process?
Yeah. Okay, so the next big event for us is to complete the funding that we've been in process of doing for certainly over the last year, and put a funding package in place that is a good deal for outside funders coming in, whether that's through joint venture or debt or combinations or forward sales of forward sales of gold. And then it's also a good deal for our existing shareholders, because they're the people that have supported us year in, year out for many years, so that we could do the work we've done to date, and then also so that we can maintain and then go forward with a modern mine plan that we've developed.
Absolutely. And, and you just modern mine plan. I think that this is a really important point for investors to understand. You certainly would be a low cost producer, and it may not be that important when gold is hovering around $2,000 an ounce, but if things get shaky, it certainly gives us a margin of safety. Can you just describe a little bit about your modern mining technique, and maybe even overall how things have changed so much in the last 10 years?
Yeah. So what the big thing is that, as we know, technology's moved on enormously. So some of the things that in the past wouldn't make sense, they do make sense today. So we've got a reef system that has a very large horizontal and then also vertical extent. So what we need to be is very efficient at putting in tunnels. So the tunnel to actually get us down to the vertical height underground, and then the ability to put the drives into the ore body and then extract only the high grade part with minimum dilution. And then how do we get that rock to the surface? So the engineers that had done work with us previously, they said, going forward now, with what we've learned, the best way is going to be using two small declines that run down in parallel, 5 meters apart from each other. And the aim of that is that wherever we are, we have our second egress. Second thing is, most declines that are put in, say 5 meters by 5 meters is standard, they then have, say, a 1200 millimeter vent bag in the top. So a big part of these tunnels is getting ventilation down and back out of the mine. So is what we're able to do, and engineers said, we're going to use one side of the decline is the downcast, and then the upcast is the other side. So we don't have to excavate rock just to put a vent bag in the back. So 2 3x3s excavates less rock than a 5x5. And then also we're able to standardize all the equipment. So underground, the drilling machines we use and the loading machines we use, they're going to be the same size for the declines and the level drives. So you then have a few machines. You don't have to train people across all different machines. You've got this one standard size, not sort of one size for the access tunnel, another size for here and another size for there. The other thing we found is they said that if we use electric power to get the ore to surface, the conveyor, and conveyors and technologies have moved on, that we are able to put them on the side of the decline, and the engineers have designed how the transfer points will be. So the ore that comes out underground, it'll be coarse crushed with just a mobile crusher underground. No big costs of putting in these big, expensive, permanent crushers. Just use stuff that's made for working in quarries. Underground, it just turns everything less than 100 mil. Conveyors bring it to surface. And then if we have ore on the conveyor, it will know due to technology, hey, that's ore. So when that comes to surface, the conveyor puts it on the ore stockpile. And if they're just loading on development heading waste, it's going onto the same conveyor, and it will also know. So that method reduces the air, so we don't have trucks in the decline, and therefore there's essentially largely no diesel, because the loading machines and the drilling machines use electric power. So that drops our ventilation requirements. So we will save probably about 70% of the normal ventilation electric power is removed from the mine. So, and as you look at these little increments, you start to see, hey, if you change one thing, you get benefits of another. So when the decline now can go just straight to the ore zones rather than having to wait to get to an air shaft, we have permanently ventilation with us all the time. We're moving the minimum tons to the surface and doing it in an efficient manner.
Absolutely. And I think that there's probably, 2 points that come into my mind immediately, which is number one, it reduces your cost, work it out to a cost per ounce. But the second is also, with a 70% power reduction, just so much more sustainable for the environment. And let's face it, that's a mega trend in not just gold, but in all commodities. Isn't that accurate?
Yeah, absolutely. And while yes, we start thinking about these things because it's better for the environment, you then start to think, hey, this other way is going to be less cost to do it a different way. It's just the usual easy way that everyone keeps doing it because everyone's doing it, that once you start to change the mindset for your particular project. So what we're doing wouldn't suit every other mine. It might suit a few of them, but hey, we just want to work ours. We've got a 11 million ounce resource. We have a smaller reserve, but mainly because despite the very high grades, under JORC reporting standards, to convert to reserve, you've got to have a certain predictability of the drill data. And that is really, really difficult to get. And therefore, to mine under a town, you can't go drilling the whole surface out as you would if you had a virgin piece of ground. So the technical guys have come up with this hybrid. If we can be really, really low cost of putting our tunnels in, that then means the decision on what percentage of the stope will be extracted as ore and what will be left as waste, that's actually made as a part of the mining process and something that's still used in other parts around the world today.
Absolutely, and I suppose, is that where also maybe your worldwide global experience and reach certainly plays to your benefit?
Correct, and we've been talking to people. I've been up to Norway, not this year, the year before, in 19, going underground, looking at some particular technology that was used in this huge road underground tunnelling project. We weren't interested in the TBMs, but they were using some other machines to actually do the junctions between the TBM tunnels. And I've always believed I like to go down and actually see it. And then it's a lot easier to make a decision, hey, will that work or won't? And that was one of our tech guys said, look, there's some equipment up there. Go and have a look at it. Let us know. We've spoken to the Heroneck people. We've put proposals to them. They're the people currently here in Brisbane putting some big tunnels through for a cross river rail project. So we've spoken to a lot of smart people that what you do underground, whether it's civil tunnelling or mining, to think, hey, out of all what they do, there's a little bit of what they do. That's a real little gem, and we can take that away and integrate that into our project.
Absolutely. Another form of extraction, if you will.
Correct.
Absolutely. So, Mark, we try to keep these interviews short and sharp. Obviously, there's a lot coming up in the next, let's call it 12 months. I think you've also explained really well how the modern techniques, and it's very, very well defined, what you're going to do. It's really a question of pure, utter execution, if you will. In closing, Mark, are there any thoughts or anything that you would like investors to look out for?
Well, going forward, next big key for us is announcing the funding, and in a way that investors, I believe, will say, hey, that's pretty cool. Next step is you've got the funding in place, you've got some lot of group of professionals that are going to be executing the project for you. While many of us would say that our particular company is undervalued, I think with the size resource we have, we've got the granted tenure, we've got the rights to mine, and now we're approaching it in a modern, low-cost approach. We've said we want to be an ultra-low-cost producer. I think many mines today probably are mid-figures around the maybe 900 Oz. So we plan to knock that out of the park and just re-establish that the way of doing it. Just go down, just take the minimum you need to take to surface, and then get most of the rock out of it, ultra low cost, for example, using sorting technologies that have moved forward tremendously in the last 10 years. We did our first test work 10 years ago when no one was even thinking of sorting technology. Now the computing power's come up, and it means that you can probably get 80% of the tonnage that you would normally put into a process plant out for maybe something like $5 a ton. So this is the sort of game changer stuff compared to just conventionally putting everything through a ball mill and doing it the normal way that's going to cost you $20, $25 a ton. So those sort of savings, as you build them in and you put, say, 10 times that saving in, you can really do stuff at a much lower cost than in the past, do less damage, generate less waste, because we think there's the ability to repurpose our waste, make concrete, building products, and generate a lot of productive good back into the community with things that normally companies just go and chuck in a tailings dam.
Absolutely. Mark, thank you so much for your time. I really appreciate it. Again, I think it does sound incredibly compelling as far as you're doing good, being a low-cost producer, at the same time, a clear path towards production. Funding sounds like, at some point it will come through there, and then we'll be off to our 300,000 an ounce target.
Well, we've set our target as by the end of December this year to have the funding in place. So watch this space. Absolutely. And thank you very much.
Thanks, Mark. Bye-bye.
Okay. Appreciate it, Greg. Bye.
Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.